Hey Erwin, how are you doing? Good morning. Hope you guys are all well. Back with our live stream today. No live stream yesterday, but back to it today. Okay, yep, okay. Everything seems to be working. TradingView seems to be thinking about letting me stream. It's not ready to stream yet. Try that again. Hey Ted, good afternoon, how are you doing? Hey Nicola, good morning. Hey Diana, how are you doing? The stream on TradingView is not working. Give me a second, let me just try and sort that out. Let's see if we can get that to work. Yep. Okay. Stream on TradingView is not working, so don't know. We'll see if people on TradingView will jump over to Discord. Can someone on Diana, if you can help me out, or anyone else, please put it into the Discord channel that the TradingView stream is not running. So if anyone is on TradingView or waiting to jump onto TradingView, please tell them to jump onto the YouTube stream. Help me out with that, please. Good catch on the Aussie. Yeah, super happy on the Aussie with the RBA decision. Hey David, how you doing? Alrighty, okay, so everything else seems to be working fine apart from TradingView not streaming. Okay, so okay, let's keep going. Again, if you are new to the session, welcome. Thanks for joining us. Do drop a message. Very friendly bunch of people we have here, so do drop a message. Say hi, let us know where you're joining us from. The link for the Discord channel is there for you to join. Absolutely free to join us on Discord. That's where we take our discussions beyond this daily market analysis. When I enter a trade, where I get off a trade, reasons why I get off a trade, any updates I have, I will share on the Discord channel, so you can jump onto that. And for all the regulars, a big welcome back. Thank you for joining me on this daily market analysis. If you can help me out massively, do click that like and subscribe button at any point in time, okay? A quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material only. The contents of this webinar are not intended to be a recommendation to trade a financial product, so please remember that your objectives, financial situation and needs has not been considered, and you should consider its appropriateness to your circumstances. With that done, just a quick plug here. There is a voting thing going on here for, oops, I just did something. Let me just make sure it's okay. Okay, seems to be still working okay. All right, might have, I think I'm still streaming. Yeah, okay, still works. If you can help me out, the link is going to be in the chat there for you guys. Do help me out, click on the link, vote for me as the Distinguished Educator Award. I really want to try and win this one, so the link is there. Do help me out. You get 10 votes a day. Do it every day. Vote every day, 10 votes a day. Hopefully, fingers crossed, I'll win that category. Okay, so shameless plug done. Take that away. What has happened since the last time we spoke? Okay, we did a session on Monday, nothing much on Monday. We did see the dollar index on Monday pretty much it did retrace down to that level at 103, bounce back up. We kind of expected that bounce around, but on Tuesday it did break to the upside. Early Tuesday morning it broke to the upside. Okay, so nothing much happened following our session on Monday, but on Tuesday we did have the Aussie interest rate decision. They held rates, the RBA held rates at 4.35%. Rate statement was not hawkish, so that disappointed markets a little bit. And also, given that we typically anticipate that when rates are held, or when we've seen the Aussie rate decision come around, we always see a bit of a drop on the Aussie dollar unless they hike rates. Okay, so what happened here on the Aussie? This was on Tuesday at about 9 o'clock. I'll zoom in a bit more. Right, so we waited through Monday, finally broke. It did break that trend line. It came close. You might have entered early Tuesday at 2 a.m. I don't think many of you would have. It bounced back up a bit, and then after that on Tuesday at 9 a.m. GMT plus 8, it started trying to push to the downside. The news was released at 11:30 a.m. GMT plus 8, just on that candle there. All right, so I think it was maybe 9 or 10 a.m. that I was telling you guys, I think around that candle, that hey, you know, before the news release, we're seeing Aussie push to the downside. I did get onto that trade before the news. I don't usually recommend this to a lot of people, but I did get in before the news as it broke that trend line, as it was showing a push to the downside. Took a bit of a risk, 20 pip stop. This one we had it down to that 80 pip take or 85 pip take profit, or was it 85 pip take profit? And the news came out, so it started pushing down, right? It started pushing down before the news, 1 hour before the news. I was already in profit, so I thought, great, I'll hold on to it. And then during the news, it pushed right down. I'll move this to the side a bit. Right, during the news, 4.35, no rate hike. Bearish move on the Aussie, no hawkish statement. So we saw the Aussie actually push down. So immediately on release of the news, it went from 0.6598 or about 0.66 thereabouts, pushed to the downside. It hesitated a long time. I was very keen on, I thought of closing out at that point, right? It pushed down about 30 something pips. Let me just measure that. It pushed down about 20 something. When I was in, I got in about there, so pushed down about 40 pips. I thought, right, maybe time to get out at that point, that dotted line there, because that coincided with our 61.8 level. Right, coincided with 61.8 right there. So it dropped and it hesitated then. I thought it could look something like what we saw on Thursday last week, right, where it bounced, Thursday last week, where it came down and bounced right back up. So I was very keen on that, but I thought, right, I have 40 pips profit, hold on to it, see what happens. Then sat there through the whole day and then pushed down, right, and then pushed down later into the trading session. I did get out at about 60 or 61 pips, I think 60. After that scare, right, after that one where it came down, I thought, great. As it was pushing down, I thought, great, I could be hitting my 85 pip take profit here. And then the next hour at 11 p.m. GMT plus 8, it shot right back up. Not so much because it's broken at 61.8 already, but it shot right back up to this level, and I thought, uh-oh, right, might be looking to close out. Waited a while, came back down, and then when it came down again to that equal, drag that across, that equal level there, I got out at about 60 pips. Okay, so that was my trade on the Aussie from yesterday, and I was sharing all that on the Discord channel. Right now it's set across, well, it's set across through Wednesday morning and shot up a bit, surprisingly that it shot up, because today, this morning, we did have the Aussie GDP number quarter on quarter being released. It was 0.4, expected 0.5, came out at 0.2, right? So if I didn't get out of that trade, if I did not get out of the trade at that point, I would have thought that with 0.2, we're going to see more weakness on the Aussie pushing to the downside. Fortunately, I did get out of that trade, and we did see, surprisingly, the Aussie bounce back up following that news. I can't explain that move apart from at that time at 8 a.m. we did see, oops, I'll zoom in a bit, we did see the what's that called, the dollar index push slightly to the downside, and also it was also the Kiwi dollar that pushed up at the 8 as it found that support level, bouncing off support. So I thought either a correlation between the Aussie and the Kiwi, because there was such a small drop on the dollar index, but it was most likely that bounce up that caused the Aussie to push up despite the GDP number early this morning. Okay, but overall, as Diana says, happy to have caught that move on the Aussie. Ted got 45 pips on that down too. Well done, good job. Hey Spiros, how are you doing? Hey Jamil, good to see you. Hey Royal Governor. Hey Jimmy, good to see you guys. So that was a move on the Aussie that we caught on Tuesday. I did get stopped out on the Euro, right? Not very happy about that. It pushed down. I did get into that trade, and next moment it retraced right back up, stopped me out at 20 pips. Overall, still a good analysis because it did come down after stopping me out, so I was annoyed with that, but I was super busy yesterday, so I was only focused on the Aussie. But we saw on Tuesday, yesterday, the euro dollar did fall from 108.47, almost 108.50, down to 1.0780. All right, so overall, still that downward trajectory for the euro dollar, but I was annoyed that I got stopped out there. And that's why I was only going to get into the Aussie with the main intention of covering that loss, but also, you know, because of the news, trying to see how much lower it can go on the Aussie dollar. Ted caught 30 on the way up for the Aussie this morning. Well done. I was not comfortable buying this up because I was thinking that it should be dropping, so I didn't trade that up. Okay, so what else happened last night or yesterday? We did have a whole bunch of PMI numbers released yesterday. Not super bothered by that, because as you know now, PMI not one of the major features in terms of economic data releases, but it did show some good news, which again, despite the good news, we saw the dollar, the euro dollar dropping because of that dollar strength. Then late last night, 11 p.m. GMT +8, we saw JOLTS job openings for the US drop. Right, it was 9.55 million, revised down to 9.35. Expected 9.31 was released at 8.73. 8.73. And because of that weakness, there was a lot of volatility at that point. You see that 11 dollar index at about 11, we saw that move, right? We saw that candle push down because of that slightly surprising number on the JOLTS, came down, tested this level, and then bounced. So this was a bit of that kind of level, came down, tested this equal low, and then bounced right back up. Right now, the dollar index is sitting just below the resistance of 104, just below that round number of 104. Okay, so that's all that has happened since the last time we spoke. Right now, we had the we spoke about the Aussie GDP. We have construction PMI coming out for the UK. Again, not too bothered by that, but it is showing that we might see a bit of a spike to the upside on the pound dollar. If it really does go from 45.6 to the expectation of 46.7, you can see that that's going to break, or that would be breaking a bit of a downward trend on the pound dollar, on the construction PMI, because the last 2 months it's gone from 50 down to 50.8 down to 45, then 45 slightly upwards to 45.6, but still in the contractionary phase. It looks like it's slowly recovering back to the expansionary phase again. So we're going to pay some attention to that, but I don't think it will be a big sustained move. It's still likely to be driven by the dollar index. Okay, and then later today, 7 p.m. GMT plus 8, we do have Governor Bailey from the Bank of England speaking at a press conference about the financial stability report in London. Again, might bring some volatility to the pound dollar, but I don't think it will be sustained. All eyes right now seems to be focused on, firstly, the ADP non-farm, 113 to 131. So we're looking for that. I'll tell you more about that shortly. And then also through to Friday, where we do have the non-farm payrolls to be released. Remember, the comments from the Feds so far has been, yes, economy is doing well, inflation is slowing down, inflation growth is slowing down, but it depends on overall economic activity and employment numbers or employment situation. So non-farm payrolls becomes quite crucial now. I'll tell you more about that on Friday, but it's previously at 150k, expected 185. The idea is that if it stays strong about that 185 200 number, that's going to add on to more security for the Feds to keep rates at the current level and possibly even look towards cutting rates. I told you a lot about that on Monday already. All right, so the focus is shifting towards the non-farm payrolls on Friday. Then later tonight, 11 p.m. GMT plus 8, we have the Bank of Canada with their interest rate decision. Overnight rates for the Canadians at 5%, looking to stay at 5%, most likely going to stay at 5%. I don't expect any big surprises here from the BOC, so we might be looking at, similar to what we saw on the Aussie, we might be looking at a bit of a weakness coming around, or we're going to be planning for a bit of weakness to come around for the Canadian dollar. Okay, so quite a number of things to look at, but again, it all comes down to what's going to happen on the dollar index, on the front of the dollar index. A quick look into the CME numbers. Hey Mouse, how are you doing? A quick look into the CME Fed Watch tool. I'll do that. Let's let that load up. My trading view is still not streaming, so I'll take that away. Put that across. Okay. Why is that not loading? Okay. Load. All right. Okay. So you can see that the Fed Watch tool from CME, 13th of December. Again, now we've shifted away. Right. On the 4th of December, we were at 1% chance for a rate hike. Now, at a 0% chance of a rate hike, a slim, tiny chance of a rate cut at 0.3. But it looks like an almost certainty that we're going to see rates stay at the current level of 5.25 and between 5.25 and 5.5% for the December 13th meeting. Okay, so when I see this and this chance of a almost certainty that they're going to hold rates, I'm not even factoring this chance of a rate cut. When I see this, I'm a little bit surprised to see the dollar push to the upside. Right? I'm a little bit surprised to see the dollar push to the upside. What I would conclude, or not really conclude, but draw from this is that we might be seeing a bit of a bounce before continuation back down again. Okay, so with that, we've done that. Take that away. We've done all that. We've got FPC meeting, so it's a bit of a pound volatility day today. And okay, we've done all that. Okay, so now looking at the charts here on the dollar index, take that squiggly line away and did not break to the downside. What I would say here, and I'll take, although we have this nice trend line down, it's broken to the upside already, and I don't want to draw that because we're missing out on a couple of levels. I'll take that trend line away. 38.2 is still valid. Now we're going to check on this for 50, and 50 is about there. Okay, some questions here. Hey Christina, how are you doing? Hey Stefan. Okay, Diana says dollar index on a daily time frame seems overbought. Yes. Looking at the way it's moving, yes, I would anticipate. H4 time frame, stochastic RSI heading down plus, again, I forgot what VIB is, but I know it's imbalance, and price might go to that level, which will be support, and if it holds up, possibly will go up on H1 heading up. Yeah, so I was just about to say that, well, not about to say that, but I was just thinking that if we caught this whole thing, that doesn't make sense. I'll catch this one. I'll take that away for now. And what we have here on a highlight is that we might be seeing a bit of a channel to the upside here on the dollar index. Right, we might be seeing a bit of a channel here on the dollar index to the upside, and we see that even if we catch that one with more points, you see that pushing to the upside. Oops, don't do that. Do that. Okay. Okay, so that's what I'm looking at here, and that's why I was looking at that 38.2 level, that 50 level as well. From the longer term, let's see, 23 is broken. From the longer term push from the downside, right? Even if we didn't catch this, let's just have a look at that. From that move, you see that it's broken 38, but it's coming to that 50. And what's interesting, or interesting to me, is that if we did that, you see that 38.2 from the longer term, and then from the slightly shorter term move, that 50%. So we take away 38.2 here because that's broken, right? You see that 38.2 and the 50 seems to be what's the word, coinciding quite well, and there's a bit of a confluence there, and that also is a bit of a peak, a bit of a swing level that we see there. Okay, and that's at 104.22. We see that confluence with the next swing level. I don't need that. I'll take this right across and look at 104.55 here. Okay, I'm happy with those levels. So right now, that's what I'm looking at. Okay, David's got that drawn. Very nice. Now let me do that to highlight this area just to share. Okay, so I've got this point. I want to just put a bit more relevant level right there. Okay, so we got 104 here as a nice round number. Possibly if it does break up, then we have a bit of a confluence here at 104.20, 23, 25, and then the next swing high here at 104.55. Okay, so like Dinah was saying, daily time frame. Oops, let's have a look at that. On a daily time frame with the RSI, for example, it was a bit oversold at that point and bouncing back up. Not quite overbought yet on H4. It did come down slightly from the overbought region, heading down, now pushing back up. And there's a bit of an imbalance, I'm guessing that point there. Might go to that level, and if the level supports, it'll possibly push up. Okay, I agree entirely with that view. Oops, I lost my, okay, take that one away. So I agree entirely with what you were saying there, Diana. So I'm in a different way. Without the imbalances and all that, because I'm not full bottle on that. But what I would say is that it looks like it's going to consolidate along that 104 level. It could even retrace slightly down before pushing back up. Okay, trading within this channel to the upside. So we're looking at that. Test, consolidate. Let me see. I don't see why it might retrace. Okay, I don't see why it might retrace. So let's zoom in a bit on that. And then today being the 6th of December, we would say that the dollar is likely to consolidate along 104 resistance, break up to upside, test 104.25. So I think, and break test 104.25, I think that we might see it push up towards, okay, with resistance at 104.55. Okay, so essentially what I'm thinking here is that we're likely to see it consolidate along this level, break to the upside that way. Right? Could it retrace? Yes, it could, but you know, it's not far off from that trend line here. So even if it does retrace, I think it's not a big retrace. I would consider it more as a bit of a consolidation like that. If we test this point all the way to the top, we have about that. I think it wouldn't even come down to that 23 level. So I think it's just going to consolidate along this range and push up. Okay, so consolidate along 104 resistance, break to the upside, test 104.25 with resistance at 104.55. Okay. Jamil says consolidation now. Yep, okay. So overall, what we're looking at, a bit surprisingly, a bit against the swing of how it's been moving, is we're looking at some dollar strength come back into play. All right, some dollar strength come back into play. Now, looking at the other charts, we'll zoom out a bit. Kiwi dollar, thinking it was going to bounce, it broke that trend line. We take that away. All those did not trigger, did not happen. Take all that away. 61.8 on the short term, 38.2 on the longer term seems to have held quite well. So we'll keep a view of that. I don't need that. I need this point here. We found it test the support and bounce quite nicely. Trend line is done. Take that away. So what we're looking at right now Support and resistance drawn from the higher time frames for higher probabilities. Not necessarily, David. So not always that you have to draw it from the higher time frames for higher probabilities. I typically would advise most people to draw it on a H4 time frame. Then that's it. But because we're more intraday trading right now, especially on the streams, so that's why we draw an H1 time frame. You kind of want to draw your levels based on the time frames that you're trading at, right? Imagine if you drew your support and resistance on a daily time frame, but you trade on the 15-minute. It wouldn't make sense at all. So what you want to do is draw your levels based on the time frames that you're looking for setups on. Okay, hope that makes sense. Now on the Kiwi dollar, actually a lot of this are all done. We can take all of this away. Just doing some, okay, I'll do my housekeeping later on. But I get annoyed when I see too many lines on it. Okay, so now in that range, support level there, resistance level there. You're welcome, David. Trading along that 0.6168 or 6170 level. If you tested this point, you would notice that it's right at that 38.2. Is it at 50? Yeah, it just caught 50 and it's holding 50, right? So anticipating that we're going to see the dollar consolidate at this point before some strength possibly coming back into play, what I would be looking for is this consolidation and then a push back down. Okay, so not the best place. Not the best place because it is right in the middle of that support and resistance level to be trying to jump into a trade, because you could be looking at 6155, very tight, 28, 30 pips. I wouldn't even bother doing this, right? You're looking at a almost 1:1 risk to reward. Could happen, not worthwhile. I would say that Kiwi dollar is right in the middle of that support resistance level. So I would stay out of it first. Okay, not worth trying to guess where it's going to go. Kiwi dollar is a do nothing, because it's in the middle of support and resistance level. Sure, you can be looking to scalp it down or to do short-term trades to the downside, but it's right in the middle there. If you really had to do something, then I would say look for a reaction at the support to break down. But I think there will be other opportunities to look for first. Okay, so nothing on the Kiwi dollar for now. We look at the Aussie, break to the downside. We're happy with that. We can take that one away. Again, that trend line has broken, so we can take that one away. 61.8 has broken, we can take that one away as well. All right, now in the longer term, that trend line, even if I did drag this right up, is still not something that we're going to pay attention to yet. But you see that the Aussie reversed from there, pushing down. What I'm looking at, or what catches my eye, is that point. Okay, how it reacted at this level here and how it's reacting at this level. If you looked at this back down, it's broken 23, it got held at 38, pushing back down. Now you're looking at this point, looking to sell down 6575. Stop loss tight at 20 pips. Take profit, we could go down to 50, about there. Right, that's a continuation of the downside. You can see that so long as there's 38.2 holds, So it sits in that consolidation at this point and then pushes down. I would anticipate with that downward momentum, although, yeah, the last time I got out at about that point, we're going to see more momentum push that down, right? And even at that point, it's a 1:1. We can look for that move towards that 50 pip, towards that support level there. So I'll be happy with that. On the Aussie, I'll look to sell at 6,575, stop loss 20, take profit 50 to the downside following that news, following the GDP number especially. So I want to see that drop. I'm a bit surprised it rose up, so I want to see that drop on the Aussie. So it sits in consolidation. We can see that push back down. Okay, any questions so far? Do put into the chat, let me know. On to the yen, right? On to the yen. Look for it to test and push down. This was on Monday. Did not do that, so we take that one away. It came down, it bounced back up. It's now looking like it's going to push down again. What you would notice is that the yen is in that consolidative phase, right? And here's something interesting is that despite that big push on the dollar, right? Despite the big push, this was on Monday, it was at 103. Well, Monday was at, start of Monday was at 103.13. Today now it's at 103, almost 104, but the dollar yen has not moved that much, right? On Monday is at 146, the 146.40. Right now at 147. It's only moved at 60 pips. We're still looking at a possible push to the downside. I don't see this as a recovery, a possible recovery on the dollar yen, despite potentially looking at some dollar strength coming back into play, right? And also with that 147.40 resistance level holding, might be looking for that push back down. Dollar index is still sitting there, so we're looking at this possibly looking to sell down. I think the safer one will be here, but it's a bit premature, looks a bit premature at that point. I want to say that below 147 we could be looking to sell down, right? So safer option would be that point because of these points here. What you could be looking for would be 146.70, 20 pip to 60 pips to the downside. Right? If it sits in that range, do nothing, but if it comes down and closes below 146.70, you're looking at 20 to 60 to the downside. So we're looking at sell 146.70, stop loss 20, take profit 60 to the downside on the US yen. Dinah says, I thought Aussie and Kiwi kind of doing similar. It is doing a very similar move on the Kiwi and the Aussie dollar. What I'm just thinking is that there seems to be a bit more space on the Aussie for a more comfortable H1 kind of trade compared to the Kiwi, where it's got a strong support here. And if you're looking to sell down at that point, you know, we're only looking at about a 30 pip stop, 30 pip take, about a 20 pip stop. You could do that, but that's I think a bit too much to expect, because it could come close and bounce, it could just go straight through. Not really, I guess not so much worth the risk or worth the attention. I would prefer that on the Aussie. So if you're comparing the Aussie and Kiwi, I would prefer the Aussie rather than looking at the Kiwi on that. Unless the Kiwi comes down and breaks that level. Then you can go like, you know, tight stop, no more than 15, take profit at 35. That seems to be a bit better. While the Aussie, if it drops, it would have come to that strong support. So it's a Aussie first and then Kiwi next, not at the same time, right? Hope that makes sense to you, Diana. Yen is doing well. I'm looking forward to that. Pound, dollar came down, bounced, did not sustain the bounce, came right back down again. Take that away. And then 50% holding. 61.8 is quite far away. We can take that as a support area away. Move that to here. Now at that point, remember that we're looking at 5 p.m., 5:30 p.m. We do have some construction PMI data to be released. Might be showing some upside move. And Governor Bailey speaking about, well, we have financial stability report, FPC meeting minutes and statement, and the financial stability report might actually, you know what it might do? Because of that downward push, what you could be looking for here, again, let's do that. You get that opportunity again on the pound dollar, and we did well on the pound dollar for the previous straddle that we did the last time round. What you could be looking for here again would be to sell down 1.2575, stop loss 20 pips, take profit 50 pips to the downside. If it holds and it bounces back up, I don't actually see it bouncing back up actually. Do that, 50% is right there, bounce back up. I was going to say that you could be looking at that with a 25 pip stop and a 50 pip take. You could look at that with 61.8 in place. How about that point there? Right, so it's going to sit along that support. We look for that bounce upside or that breakthrough to the downside. But I think ranking this two, I would prefer to look for a break of the support. Okay, so we can say that there is a bit of a straddle here, but I would be looking to sell at 1.2575. 1.2575, stop loss would be about 20, take profit about 50. Take profit about 50, but there is still a possible straddle. Okay, there we go. Jamil says today hold 4 trades on the pound dollar and sell, win 3 trades and lose 1. Win 3 trades with 287. Well done, Jamil. Good job. And 1 loss at 25. So that's fantastic. Doing very well there, Jamil. Good job. Congrats. So yeah, we have a bit of a straddle here. Right, possible bounce along this support. We got a straddle for a break, bounce to the upside or a break of that support back down. I like that move to the downside a little bit more. Cool. Very nice, Jamil. Super happy. I like reading things like that. I love reading things like that. Okay, now euro dollar pushing to the downside, continuation back down. We can take that one away. We've got too many lines here. Okay, we don't need that. That's a whole area that we're going to consider for our support. That's the bottom of the support. All right, that one we don't need, and that one we don't need for now. We can look at this whole move down 38.2. I don't even need that, but what I want to highlight is that point. That's a bit of an overlap resistance. Take that away. What I would be looking out for on the euro dollar at this point will be if it does push down and break that support. You'll see that this is quite a strong level, right? And it's come all the way down. Let me just check this. 61.8. Okay, that's fine. What I'm looking for is that consolidation and then a push to the downside. Remember, dollar index consolidating, looking for a push to the upside. So inversely, we'll be looking for the euro dollar consolidate and slowly push down. Wouldn't rush into it right now. I would say give it time, give it space. Look to only sell down below 1.0757. So I would say 1.0745, stop loss 20, take profit, could go down a whole lot to 85 to the downside if we see that dollar strength do come back into play. Dinah, I will do Swiss yen. Okay, 1.0745. So we're all looking at, we have some opportunity. 1.0745, stop loss 0.0745, stop loss 20, take profit, can't type today, 85, stop loss 20, take profit 85. There we go. Okay, so look, Kiwi, yes, we think that it's going to go down, but because it's in the middle of support resistance, we'll do nothing for now. Aussie, we're looking for the dollar strength to come back into play. Yen, we're possibly thinking, although there might be dollar strength, we're looking to sell down. Maybe if that dollar weakness scenario, we can look to sell down as well. Pound dollar, looking at some pound weakness and maybe the dollar strength. While euro dollar, we're looking to sell down again with that dollar strength scenario. So again, we're covering our bases with the dollar strength and dollar weakness scenarios. Now still consolidating at that point. Then we look at the Swiss. The Swissy hasn't done anything. Well, it's pushed up through Monday and Tuesday right now at that support turn, well, resistance turn support level. Trend line holding it to the downside. 61.8 is still valid. Dollar index pushing a little bit, but it's a bit surprising to see a relatively big move on the Kiwi, on the Swissy. Break down. Okay, we're looking at this in the dollar weakness scenario. We're looking to see 8735. Stop loss 20 pips, take profit 50 to the downside. Dollar weakness scenario. Always planning for if we're right and dollar goes up, if we're wrong and dollar goes down, what can we trade? Dollar weakness scenario 8735. We're looking to sell this down 0.8735. Stop loss 20. Take profit 50 to the downside. Okay, I'm looking at that trend line, holding it and pushing it back down into this range. Okay, so now looking at this, anticipating that the US Swiss franc could come down, maybe some Swiss franc strength coming back down, together with the US yen possibly pushing to the downside as well. Then, like Diana is asking for, the Swiss yen right? We saw this test, well, not test, bounce back up to that level. So we'll take that away. What we'll highlight is that there is this resistance level. Well, I wouldn't even call it a resistance level. I'll say just a level of something to watch. I don't want to say level of interest because that means something else for a lot of different traders. But we do have 168.34, 168.35. Swiss possibly gaining some strength. That's why we're seeing this push up. Yen possibly gaining some strength. That's why we're going to see that possibly consolidate along this point. That's still holding to the upside. If we did that, that's still holding to the upside. I would actually be a little bit more bullish on the Swiss yen. No. I think what could happen here is a consolidation along that point, but what I would be looking for will be for it to break that trend line. Look for it to break that trend line. So below 168, 167.90 for example, stop loss about 30 pips, take profit, could go down to 80 pips to the downside there on the Swiss yen. Okay, so I'm looking for that consolidation along that point. Only if it breaks that trend line, then we could see a push to the downside, because Swiss gaining some strength, pushing it back up a little bit, but the yen dropping might drag that back down. So we're looking for that to push down. Okay. Hope I answered your question there, and I hope it aligns with your view on that, Diana. Let me know if it aligns with your view on the Swiss yen. PM is asking about the pound yen. We can do that too. Pound yen, pound dollar, we are looking at that consolidation with a bit of a straddle. Push up. I think that one you can even go a little bit higher. You will go to 1.2620. Your stop loss in that would be 30 pips. Your take profit could go up to 50, about there. I think it's a bit too near just then, so give it a bit more space. Pound dollar, a bit of an indecision. Yen pushing, I'm looking forward to that. Could be, not saying it is, disclaimer applies, but could be a bit of an easy 60 pips. We're looking forward to that. Pound yen, in that case, pound yen, I think that with the way it's moving, trending to the downside, yen pushing down, not the ideal place to be entering a trade on the pound yen right now, because we do see that point as a bit of a level that is bounced off. What I'm possibly going to be looking out for is what happened here. Right, so I'm looking for it to come down, test, and then maybe bounce back up. Maybe with some pound strength coming back into play, but ultimately I would be waiting to see what happens at this support level. Right? What happens at this support level? Could it do something similar to this, or is it going to break through? So we're looking for nothing right now. Ideally looking for something to happen at the 184.70 level. Right, look for a reaction at 184.70. All right, PM, hope I answer your question there on the pound yen. I've done that. That's dropping. Ooh, that's coming close. Dollar index is, well, still consolidating. It's not doing too much. So now looking at the CAD, remember, we have the Bank of Canada with their interest rate decision, 5% holding rate statement. If you look at the last time they released the rate statement, when was it? Let's see. On the 25th of October. rate maintains policy rate, continues QT, held rates continuing QT, inflation has been easing in most economies, Canada growing evidence that past interest rate hikes have been dampening activity, relieving price pressures, CPI in volatile, expected to range to 3% period, clear signs is moderating spending, wants to see downward momentum continue, blah, 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 blah. Okay, so we're not looking at potentially any surprises there. They did say they're prepared to raise rates further if needed, but I don't think it'll be in this case. You know, with that, if we scroll back to the 25th of October, you know, I like doing that. You see that on the 25th, about that time there, right? I think it's about the 11 o'clock period, 10, 11 o'clock, depending on daylight saving. It pushed up and then it retraced right back down, but it continued with the overall trend. And that was when the last time round, they held rates at 5. They've been holding rates at 5% since July. Okay, so what I anticipate here for the CAD, now at 1.3561, I'm still looking for that move. Right, because it is on a big downward push. It's climbed back up, it's tracing back down right now. I would say that I'll just drag that right across. It could come to this support level and bounce and then push back up. So what I'm looking for is a bit of that kind of move. Bit about that kind of move. Right, and then I would be looking a bit lower, 1.3525, stop loss 25, take profit 75. Test and bounce, that would make sense. How can you get in touch with me? Jump onto Discord, get in touch with me on Discord. That'll be the easiest. Much better waiting demand area pound. Yes, I know for sure. Jamil, yes to sell CAD. Yes, agree. Okay, so look for it to react at that support level. I'm only looking to sell 1.3525, stop loss 25, take profit 75. So US CAD, we're looking to sell 1.3525, 25, 25, 75, too many fives. 1.3525, stop loss 25, take profit 75, BOC rates decision pending. So you don't want to get into that before the news. You don't want to get into this one before, well, not before the news as in right now. Even if it does trigger, you want to wait for just before the news if you really want to get in before the news. All right, if I do get in before the news, I'll let you all know on Discord as well. Then, last on gold, all right, we saw that retrace. It shot up on Monday. We talked about that. We were looking for 50% to bounce off. It came, it broke, and then it started pushing back up. I thought, great, I'm ready. I want to buy this up. Hit that level, and then after that turn back down again. But what you'll notice is that it did come down to test. It broke, although it broke 50, it did come down to test 61.8. Okay, it did come down to test 61.8. Now bouncing back up off 61.8 support area. Right, I'll consider this whole thing as a bit of an area there. So what I'm looking for here in this case now would be, move that down a bit, check that. We can take that levels. Okay. What needs to happen here is that You're welcome, Diana. Moss likes the move on the CAD. I'm looking forward to that too. It's quite close, so I would even say above 2041. Now let's check this points back down, and you see that that coincides with 23.6. Okay, so what we could be looking out for here on the gold would be above 2043. Above 2043, then you could be looking for it to get up towards that resistance level of 2070, which is between that 38.250 level. I'm not too worried about that. I would say 2070. We've seen that reaction there. We've seen that reaction there, and that's why I'll be looking for that as a target level. Okay, so 2043 up towards 2070. So we're going to see gold. Look for it to continue the rebound. 20 above 2043, we could trade up to 2070. Above 2043 could trade up to 2070. Alrighty. So there we go. That's still sitting in that consolidation. That's fine. Alright, so with that said, please remember, I've lost that link already, but do help me out. Click on the like and subscribe button if you haven't already. And then if you can help me out, do remember to vote. Let me just bring that up. I'm just plugging away. I'm just going to make sure that everyone does it. Every vote counts. Have you heard that before? Every vote counts. So if you haven't already, do help me out. Vote there. And the link is there for you guys on YouTube as well, for the Distinguished Educator Award. With that said, please trade well, trade safe, and I'll see you all on Discord. If not, then tomorrow, same time, same place. Take care now. Bye-bye.